This video is going to deal on depreciation accounting. In this video, I am going to cover meaning, causes, objects, and methods of depreciation. This slides will also cover sinking fund method, journal entries. Depreciation is defined as permanent and continuing diminution in the quality, quantity, or the value of an fixed asset. In other words, depreciation is gradual and permanent decrease in the value of an asset from any cause whatsoever. Depreciation is a shrinkage in the value of an asset at a given date as compared with its value at a previous date. Let us see what are the examples of fixed assets like building, furniture, office equipment, machinery, and so on. How to calculate a depreciation on fixed asset? If a truck is purchased by a company and say it costs rupees 1 lakh and it has a usage life of 5 years, then the depreciation for those 5 years will be calculated as rupees 20,000 every year. Now how do you get 20,000? That is 1 lakh, that is cost plus installation charges minus any scrap value divided by life of the asset. So here there is no installation charges, there is no scrap value. So the amount calculated is 1 lakh divided by 5 years. So you get 1 lakh divided by 5 years, you get rupees 20,000 every year. Let us see what are the causes of depreciation. Following are the important causes of depreciation. The first one is physical wear and tear. The most important fact that contributes to depreciation of an asset is a physical wear and tear resulting from its use. It reduces the future technical capacity of an asset to serve and its earning power. Hence, it reduces the value of an asset. Second, physical deterioration. In case of many assets, the deterioration takes place with sheer passage of time. The assets are exposed to elemental force of nature, maybe as winds or weather or any climate, etc. And hence the value of the asset decreases. Expiry of legal rights. Certain assets like patents, lease and licenses depreciate with the passage of time. Another cause is fall in the value due to demand fluctuations. The demand for services provided by the asset may fluctuate, which causes a fall or decrease in the value of an asset. And the last cause may be obsolescence. Depreciation may be caused on account of obsolescence. It may be due to technological development in asset, technique of production, or a product. Let us go and see what are the objects of depreciation. If we don't charge depreciation in our financial accounting, is it fair? Or what will be the result of not charging depreciation? Therefore, we need to learn what are the objects of depreciation. The first and the foremost object of depreciation is to ascertain true profit or loss. Ascertainment of true profit or loss is not possible without providing for depreciation as the loss in the value of asset also goes towards earning of income. Therefore, depreciation should be considered as an expenditure to earn the revenue and charged to profit and loss account. Then only true profit or loss can be ascertained. Second important object is to present a true financial position. A balance sheet is exposed to exhibit a true and fair financial position of the company. That means fixed asset must be shown at their proper value after deducting depreciation as a going concern. True value would be cost less the amount that is lost by way of any cause of depreciation during the period. The third object is replacement of the asset. The gradual reduction or decline in the value of asset leads to a point of time when the asset has no value. It cannot be used. It cannot give productivity. It needs to be scrapped and most importantly replaced by another asset of a similar type. So, replacement of an asset is another object of depreciation. Methods of depreciation are sinking fund method of depreciation, insurance policy method of depreciation, and change in the value of depreciation. I shall first deal with the first method of depreciation, that is sinking fund method of depreciation. It is also known as depreciation fund method of or sinking fund method of depreciation. In all the earlier methods, depreciation is deducted from the asset every year, but no provision is provided for the replacement of an asset. If the cost of the asset is huge or large, the financial position may cripple when the asset has to be replaced. Therefore, it is essential to make some arrangements which the amount will accumulate and will be able to replace the asset at the end of the life of an asset. Under this method, a fund called Depreciation Fund is created and the fund amount is invested in the outside marketable securities. At the end of the life of the asset, the securities are sold and proceeds are used to replace the asset. Some of the features of this method are: it requires depreciation to be charged through a fund called Depreciation Fund or Sinking Fund. Second, it provides for investment in outside securities at a particular stipulated rate. Interest is also credited to the fund. This process continues till the replacement of the asset. At the end of the particular asset, securities are sold and the amount sold or realized from sale is used or utilized for the purchase of a new asset. We shall now see what are the model journal entries to be passed in the respective financial year under sinking fund method. Under sinking fund method, the journal entries are classified as per the life of the asset. Okay. The journal entries are classified into three categories. The first one at the end of the first year, at the end of the second and the subsequent years, and third in the year of replacement. So first we shall see what are the journal entries at the end of the first year. At the end of the first year, journal entries passed are purchase of the asset, depreciation, calculation, and third, amount equal to depreciation which is invested in depreciation fund investment account. We know what is the journal entry for purchase of a asset as usual. Asset account debit to bank account. When we charge depreciation, the journal entry is depreciation account debit to depreciation or sinking fund account. The third journal entry is to invest in securities, or it is just like buying on securities. So when we buy a security, journal entry will be depreciation sinking fund investment account debit to bank account. Then at the second and the subsequent years, following journal entries are passed. Record the amount of interest received on investment. Bank account debit to depreciation fund account. Then, like we calculated the interest or depreciation in the first year, we are also going to calculate depreciation in the second and the subsequent years. Journal entry is depreciation account debit to sinking fund account. In second and subsequent years also, we are going to buy an security. And the amount is amount of depreciation plus interest for that particular year, financial year. And the journal entry is depreciation sinking fund investment account debit to bank account. And in the last year, that is the year of replacement of the asset, following journal entries are passed. Record the amount interest received on investment. Journal entry is repeated. Bank account debit to depreciation fund account. Then you write the journal entry for depreciation. Again it is repeated. Depreciation account debit to depreciation sinking fund account. Now in all these 2 years and the subsequent years, we have been buying the asset. Now the third entry is for sale. Sale of investment, because this is a year of replacement. So sale of investment in the last year, that is the year of replacement. Journal entry is bank account debit to depreciation or sinking fund investment account. Once there is sale, either you are selling the investments at profit or loss. So when investments, there is a profit on sale of investment, journal entry is sinking fund investment account debit to this sinking fund account. When there is loss, the entry will be reversed. That is sinking fund account debit to depreciation or sinking fund investment account. Then we are going to sell the old asset, and the journal entry is bank account debit to asset account. At the time of closure of fund account, the journal entry passed is depreciation or sinking fund account debit to asset account. So these were the journal entries in the 3 different financial years under sinking fund method of depreciation. Thank you.